Hey everyone, welcome back to the channel. Today we're going to talk about insurance contracts and the utmost duty of good faith. Now, insurance contracts are unique because they are based on the principle of uberrime fide, or utmost good faith. This principle requires both parties, the insurer and the insured, to act honestly and disclose all material facts relevant to the insurance agreement. For the insured, this means providing accurate and complete information when applying for or renewing an insurance policy. The duty of utmost good faith is closely linked to the duty of disclosure, which obliges the insured to disclose any information that could influence the insurer's decision to offer coverage or determine the terms of the policy. For example, when applying for health insurance, disclosing pre-existing medical conditions is crucial to avoid complications down the line. The legal foundation for these duties in Singapore come from common law principles and statutory provisions. For example, the Marine Insurance Act explicitly codifies the duty of utmost good faith. The legal foundation for these duties in Singapore comes from common law principles and statutory provisions. For example, the Marine Insurance Act explicitly codifies the duty of utmost good faith, stating that a failure to observe this duty may render the contract voidable by the other party. While this is specific to marine insurance, the principle applies broadly across all types of insurance. This legal duty ensures transparency and fairness, allowing insurance to accurately assess risk and set appropriate terms for their policies. The consequences for breaching the duty of disclosure or utmost good faith can be severe. Insurers may void the policy, refuse to pay claims, or adjust the terms of the coverage retroactively. For instance, if an insured person fails to disclose a pre-existing medical condition, the insurer may deny claims related to that condition. Similarly, misrepresentation, whether intentional or accidental, can lead to a denial of coverage or cancellation of the policy. To illustrate, consider three scenarios. First, imagine a person applying for health insurance who does not disclose a diabetes diagnosis. Later on, when they make a claim for complications arising from diabetes, the insurer refuses to cover the expenses, citing non-disclosure. In another case, a homeowner applying for property insurance describes their house as being in excellent condition despite knowing of significant roof damage. If a storm later exacerbates the damage, the insurer may deny the claim due to misrepresentation. Finally, consider a traveler who purchases travel insurance but fails to disclose his plans to engage in high-risk activities such as skydiving. If an injury occurs during the skydive, the insurer could reject the claim and argue that skydiving was material to the risk assessment. These examples emphasize the critical importance of transparency when dealing with insurance. Non-disclosure or misrepresentation can result in financial hardship, especially in times of need. Although some policies include non-contestability clauses that limit the insurer's ability to void a policy after a specified period, usually 2 years, insured individuals should always err on the side of full disclosure in order to avoid disputes down the line. The duty of utmost good faith ensures that insurers can assess risk accurately while providing insured individuals with reliable coverage. This duty ultimately promotes fairness and trust in the insurance industry. Before you sign any insurance contract, individuals should carefully review the terms and ensure that all disclosures are truthful and complete. When in doubt, it is always better to disclose than to omit information. Transparency not only protects the insured from potential claim rejections, but also strengthens the integrity of the insurance process. By understanding and adhering to these duties, both insurers and insured parties can uphold their responsibilities and maintain a fair and efficient insurance system. Thanks for joining me in today's video, and I'll see you in the next one.